Hi everyone, this is Rohit from Life and Mastery, and today we're excited to have Selma Ribica, who's a fintech entrepreneur and VC investor. She's the founder of First Circle of Venture Capital Fund and a global community backing fintech companies in key African tech hubs. Selma founded an award-winning money transfer service, Lebara Money, and was an early executive of M-Pesa, the pioneer mobile money service. A big thanks to Anto Chuang for the introduction. Welcome to the show, Selma.
Thank you very much, Rohit. It's a pleasure to be here.
Awesome. Yeah, no, pleasure's all mine. You have an interesting story. You've been, you've done your MBA from India, then you also worked in London. Now you're working in Africa, so it's you have a global perspective. How do you get into this world of startups?
I think what happened is when I did my MBA, I really realized that I want to be part of at the front of innovation and the front of social and economic change for the better. I really enjoyed that, and I decided to refocus my career on Africa.
Okay.
And I kind of realized Africa was that last continent of
and you also went on to work with Lebara.
I kind of realized, sorry, Rohit, there's a bit of a lag.
Yeah, it is. Sorry.
Shall I start from the beginning? Yeah.
Yeah.
So after graduating, when I was at INSEAD, I was reflecting kind of what should be my next step, what I really want to do in life. I already had kind of 10 years of career, and I was like, what next? And what really excited me is Africa, because I thought, well, this is the last continent where some major growth can be still unlocked and a lot of things can be enabled. And then I wanted to be at the forefront at that positive change. And then I thought, what will be the driver of that growth? And I concluded that technology will be the driver of the growth. So I ended up in technology in Africa 10 years ago. I was working for M-Pesa, which became an example of Africa leapfrogging to mobile-based solutions and banking hundreds of millions of people across the world with this innovation.
Interesting. You've been very early into M-Pesa and Lebara. What are some of your learnings working as an early executive in these companies?
I think it's important to be a believer, because in the beginning you are going against the odds. The industry is not behind you, the money, the capital is not behind you, and you really have to keep on believing that this is the right path. And it's the story of resilience and the story of motivation. And today, working with entrepreneurs, these are some of the qualities that we look at entrepreneurs, the quality and the nature of their motivation and the grit or the resilience that they carry.
Got it. Interesting. And what do you think would be some of your biggest lessons from investing in hundreds of companies with Africinvest Group while you're working with them?
I think first biggest learning is that even though no matter how smart we think we are as VC investors, or how much of a due diligence we are doing, we don't control things and we will be wrong. The important thing is to learn from those mistakes and continue personal growth, which will only improve the quality of our investment decisions. Some of the deals that I missed at times in my early investing career were because I thought that the founders perhaps didn't have enough of depth in the fintech industry, didn't have enough knowledge. But what I really underestimated was hunger. And today I understand that hunger beats depth.
Interesting.
So I try to accommodate for that.
Interesting. And how do you see hunger in a person? Is it possible to see hunger? Because somebody can be very charismatic, but how do you judge that?
So it's a bit more complex than just looking at hunger. Us as investors, now we developed at First Circle Capital, me and my partner, we developed a bit of a framework looking at different qualities we want to see at an entrepreneur or the founding team. And the first kind of area we look at is something we call relationship to self And here we evaluate a person's ability to self-reflect. If a person demonstrates ability to self-reflect, receives feedback, and is able to openly engage, receive, negative feedback, positive feedback, and quickly adapt, then we say that they are self-reflective, and therefore they will be able to test, fail, learn, adapt, and grow. And this is a key quality that we look for in an entrepreneur. Second one is called relationship to others, and here we look for empathy and ability to trust others. If a founder or founding team demonstrate these qualities, it means that they will be able to be good sales, manage different stakeholders, but also they'll be able to attract and retain high quality talent and make them work for the organization. So it's a key quality that we look for. And the third pillar is the motivation. And this is where maybe hunger can be recognized more or less, but it's the quality of the motivation. It can be positive or negative. Some people, build businesses out of ego, others because they are inspired by creating permanent change in the world. Another group, they are motivated by material gain and winning, or maybe somebody's building a spite business. Well, we look at all of this in different light and choose the best teams with motivations that make sense to back. And finally, and I say the last, is the technical skills. And here we look at persons' knowledge of the industry, previous experience, quality of their education, or the quality of their network, which have the correlation to success, but perhaps are not the most important.
Interesting. You mentioned the quality of education and the quality of the network, and I was just wondering that is it quite relevant in these times because you have platforms like Twitter and LinkedIn where somebody can build a network, but how important would be an education, quality education for somebody to be invested in?
Unfortunately, still we see today, at least that for fundraising, people who have graduated at certain institutions or worked in certain companies have built long-lasting alumni networks that they can leverage easily for the first round of money. So that really sets you up for success quicker, right? So it is a correlation for success. However, us at First Circle Capital, we also back specific universities that are maybe not so famous in each of our target country, in Nigeria, in Kenya, in Egypt, because we know they produce a certain type of talent and we like to back them. And then we like to give them that access to those global networks that they may not have, because not everybody studied at Harvard or at IE or INSEAD or whatever, Oxford, Cambridge. These people, they need this access and because it will accelerate their growth. So at First Circle Capital, we decided that we want to build, in addition to the fund, also a global community that the founders can back. So our first LPs are global fintech founders, people who do have these networks and they can extend them to the portfolio companies to enable their business development and fundraising.
Got it. And you started First Circle. What is the thesis of the fund, and are you sector and stage agnostic?
We are a pre-seed fund, 30 million in size. We invest in pre-seed and seed fintech companies. Fintech is our key focus. Key markets are in Africa, 3 markets taking 70% of our investment portfolio size, which are Egypt, Nigeria, and Kenya. These are the large markets with big population and open regulatory environment that enables innovation in fintech. This is in a nutshell what we do. When it comes to fintech, we have quite a broad definition of fintech because in Africa, often fintech is not only about pure financial services innovation, but it's also extending it to adjacent industries like supply chain, health, you name it. So we see two buckets of opportunities. We invest in fintech infrastructure on one hand, and this can be classic PSPs or predecessors of open banking or RegTech. And on the other hand, it's the bucket that we call leapfrogging, for a lack of a better word. These are people and entrepreneurs that are reinventing financial services in Africa, use case by use case, adapting it to the local context. So how do we reinvent insurance for the African population? How do we reinvent its distribution, the policies? How do we make it become a mass market product? Today, only 0.5% of Egyptian population has access to insurance. Similar things for remittances, for wealth management, for health payments, logistic payments, etc. This is our thesis.
Got interesting. And how do you do your due diligence on startups if they're spread across Africa? I mean, Africa is really big and there's so many countries. But do you invite startups to come to Morocco to meet with the fund? Or how does the diligence happen there?
No, we have a very detailed sourcing network and we manage a large volume of deal flow. We look at 150 companies each quarter in fintech in these markets, in pre-seed, and this is thanks to our network. So I'm based in Morocco, my partner is in Uganda, but we also have team in Nigeria and Kenya and Tanzania. Then we have venture partners across in each market. And finally, we do a lot of outreach because we are a fintech focused fund, meaning we are very specialized. We look at each sub-segment of fintech and we purposefully make sure that we know every deal that happens and look at every deal before we pick winners. For example, we would make a Zoom one quarter on InsurTech, and we would make sure to look at every InsurTech model and every InsurTech team in Egypt, Nigeria, Kenya, etc. Then we would do extensive research to learn what worked in other emerging markets, like in India and Southeast Asia, which InsurTech models did take off in similar environment that is to Africa, meaning informal, low-tech environments where penetration is low. And then we finally zoom in and do due diligence on a few of them and make a couple of investments that we decide are the best to back. So this focused approach really allows us to kind of go sub-segment by sub-segment and leveraging our network and reach to look at every possible deal in that sub-segment. This is our goal.
Interesting. And I know the fund is new, but do you have any big wins or misses from a cash back or multiple perspective?
Yeah, my biggest multiples in Africa are about 36x MOIC now. Globally, they're around 156x MOIC. We made some really early picks in some companies that did very well and did some partial exits already.
Oh, interesting.
However, it's a nascent ecosystem and we believe that the further growth can be unlocked. So we're also sticking into to some of the ownership there still.
Got it. And does the big hits and misses impact how you invest? Like, does it give you a confirmation bias if a certain deal works that you need to keep investing into that particular market?
I think the best learning is to learn on what went well, what didn't go well. There are no models, when we invest early stage, actually, the first screening is not on the model. And I insist on that over and over again. It's not about looking at the market size. It's not looking at the model. It's really looking at the people and looking and doing the analysis on those 4 pillars. If we find the right quality of people, then we move on to DD, due diligence, and look at the model. And only because whatever initial model it is, the right people, the right team will learn, fail, learn, pivot, and adapt and find a way to win.
Interesting. You mentioned people are important, but especially when it comes to pre-seed and seed, it doesn't really matter how big the market is. Like what if they're in a market which is very small, and they're solving vitamins but not the painkiller. I mean, that's the sort of analogy where I'm going. But how important is market for a team, for a
It's important because of our strategy. Our strategy is that we're going to have 30% of the portfolio that will bring 95% of the returns. This is the assumption. Because of that, we only make big bets, the bets that can potentially give us 50x. If we don't believe, if it's a niche market, we are less likely to do it unless we see a way for that becoming a large market eventually. So we only do big bets. Infrastructure or pure leapfrogging, reinventing a subsegment of the industry, reinventing it, turning it upside down, making it work for the African context. So high risk, high reward kind of profiles.
Got it. Interesting. And what you mentioned is like the power law in venture capital. Maybe for listeners, if they want to understand, what is power law, and what should be the multiple return for power law status in your view?
I think there are some stories around funds that returned 100x, 30x, 50x. These are very amazing returns, right? Now in African context, we still do not have enough data what that is, right? We don't have enough. The industry is very nascent. It started only 5 years ago technically, and we don't have enough liquidated funds to really kind of have benchmark and say, well, for Africa, this is where we should be.
Got it. Interesting. And especially since you mentioned Africa, such a new ecosystem, how do you keep yourself fresh and have a clean mind when you're viewing new opportunities? Because I mean, correct me if I'm wrong, because a lot of the ideas could be like a copy of what's been working in Asia and Europe as well as in US. But how do you keep a fresh mindset? What's going to work and what's not going to work.
Again, I say it's really about people, right? So we'll see a lot of teams doing the same thing, maybe doing it slightly differently. The deck almost the same positioning, but then we would pick those who are most likely to make it. Do they have the right kind of motivation? Do they have the right kind of personal characteristics, emotional intelligence? Do they have the right network to make it happen? What's their traction so far? Do we see them closing, even though they may not have too much revenue? Are they closing partnerships like there is no tomorrow? This is also traction. Are they managing to attract high quality talent to join their team? These are the kind of things we look at. So if we spot this type of quality of execution and the quality emotional intelligence, then we go for it.
Got it. And I wanted to know, do you have any insecurity as an investor, or a weakness as an investor which you would want to combat?
As investors in VC, we have a lot of potential weaknesses that we can fall victim to. One of them, of course, is FOMO, fear of missing out. If we look at the deal, and the founders are really good at making us feel like we're missing out. We see a lot of good names in the round, even though we feel some red flags about the people here and there. We may succumb to the pressure that we want to be part of the round. This is one of them. Or another one is thinking that we know better. Well, we are an expert. I worked in the industry for 10 years in Africa. I accumulated a lot of knowledge investing in different companies. I did the same. I still have to step away from that and give the benefit of the doubt to the entrepreneur who's going in and building something new, and look with a fresh head that they know better, and they should convince me that they will be able to succeed. So there are different kind of traps that us as investors we can fall into.
Got it. And I mean, we could have a impending recession or like a financial crunch coming in. But which segment of the market do you think will be hit the most, especially when it comes to fintech? Or do you think it's not going to be impacted at all?
I think this is the best time to invest because of several reasons. One, because valuations are becoming reasonable and there is less competition for deals. Second, this fear of recession and slowdown of capital deployment will actually weed out the seasonal entrepreneurs who want to build a lifestyle business. It will also weed out companies that had no attention to unit economics or were building businesses that are not sustainable. So if you ask me what will be hit the most, it will be companies with bad unit economics that were overvalued due to hype in the last 2 years. However, we do have some companies that did take a higher valuation last year, but still have great unit economics, and they will survive. They will be pragmatic founders who will go to the market, raise bridge rounds at prudent valuations, and continue growing these companies.
Got it. Interesting. And you've been in the VC industry for a couple of years now. What is the one thing you would like to change about the venture landscape today?
I would like to see more entrepreneurs investing as opposed to financial professionals. I would like to also see more inclusive environment, more diverse environment. I would like to see also more tolerance for founders' mistakes, more coaching, more tolerant for mental health issues that they are very prone to. These are the kind of things that we still work to change in this industry.
Got it. And you made an interesting point that you would want more entrepreneurs to invest, but what are your thoughts of an entrepreneur who wants to create like an operator VC fund? Do you think an operator can also run a fund at the same time? Do you think it's going to be difficult for him to focus on one thing?
I think they need to like exit and then do it. That's the kind of typical path we see, right? Because both are very, very draining jobs and require full focus. Yeah.
Got it. And obviously, Serena Williams recently retired from tennis and she got into VC industry because she was surprised to know only 2% of the VC money goes to female founders. Now, obviously, the numbers have improved, but it is nowhere, the numbers we see for male founders. Even in countries like India and in continents like Africa, what can be done to have more female entrepreneurs in the ecosystem?
Well, I mean, we are doing quite well. We have about 25% of our portfolio companies that have at least one female founder, so way above the average. And we are in a fintech industry that's not exactly dominated by female entrepreneurs. So I think one thing we can clearly do is to have more female GPs, because us as female GPs, we somehow tend to pick more female entrepreneurs and back them than all male teams. So that's clearly one thing that could be done. Other things that we are doing ourselves is we decided, for example, to have more female LPs in our fund as well, because we are a fund that offers co-investment opportunities to all of our LPs at no fees. And one of the goals is also to bring talented people with the knowledge of the industry into the deals to co-invest with us, right? And we would like to have more females. And what we did for female LPs, that we decided to have no minimum ticket for female LPs. One of the barriers for people to invest in funds usually is that the tickets are so high that this is only accessible to few people. To attract more female LPs, we decided to waive the minimum ticket. These are the kind of things that came to our mind. And finally, what we do is really try to help create more role models
Right.
So in our portfolio, when we have female founders, we intend to do intentional PR on them and celebrate them.
Interesting. Got it. And I quickly want to do the top three. What's your favorite business book?
It's been a while that I stopped reading business books. You know, I had a period after the MBA for about 5 years. So
Right.
now actually I don't read business books.
Okay. Any books?
Recently I read a wonderful book that I want to recommend to everybody. It's by a writer called Abdul Razak. He is basically just won a Nobel Prize. He's originally from Zanzibar, Tanzania, but grew up in the UK and became a professor of colonial studies. And he basically is writing books that are all about connections between Europe, especially UK, and Africa. And I really enjoyed his parallels between the two cultures and the stories.
Got it. Interesting. We'll put that in the show notes. And if you could go back in time when you started the first circle, what is the one thing you focused on or done anything differently?
I think sometimes, we are as entrepreneurs, we get so consumed in the project and succeeding the fund that we forget and reaching that goal, which is, I don't know, the target raise or the final close or the size of the fund or whatever that is, that we forget to have fun. And maybe I almost forgot how to have fun at some point of the journey, but I remembered quite soon, and I'm really happy about that.
Got it. I love that answer. And what's your favorite online tools? For example, Gmail, Slack, Zoom.
Online tools are a nightmare because we have so many, and often they don't communicate with each other. But there is one that we rely on a lot in the industry. I think a lot of VC funds use it. It's called Affinity. It really enables that manage our deal flow process and pipeline of opportunities as well as fundraising pipeline. So this is the one that's quite smart, and it saves us a lot of time.
Got it. And what is the best way people can reach out to you and know more about First Circle?
People can contact me on LinkedIn or on our LinkedIn First Circle Capital page. We are happy to get in touch with entrepreneurs, investors, wider community, because as I said, our goal is really to bring Africa on the global map and to enable better access for African entrepreneurs to those global networks. So please don't hesitate to reach out.
Got it. We'll put that in our show notes. So thank you so much for taking our time speaking to us. I really enjoyed my conversation with you.
Me too, Rohit. Thank you very much.